Welcome back, traders. With the month of September shaping up to be a quite positive month, are we coming closer to a wall of worry ahead of the Fed interest rate decision on September 20th? In today's video, we're going to be discussing the price action that took place on a positive note that ended this Thursday, September 14, 2023. And we will be discussing the price action that we see ahead so that way you can be better prepared for the next trading session. If you haven't already, please go ahead and subscribe to the channel. Please leave a like down below for the YouTube algorithm. And if you know anybody that would find this video useful, please go ahead and share this video. We would greatly appreciate it. Now, without further ado, let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back and relax. Now let's get to it. Now, one thing that I want to point out today is something that's quite remarkable that is happening today in the stock market, is that with today's positive reading, with the S&P 500 up nearly 1%, we are coming close to a quite positive month with only being down negative 0.18%. So we are close, very close to break even from prior month's close in August, and we are already halfway through the month, given that we are closing today on September 14, 2023. Now, that is quite positive. However, as we know, September also has the interest rate decision. And given the fact that we have seen that the reading for CPI came in quite hot, higher than expected, with the year-over-year CPI reading being 3.7%, with its forecast being 3.6%. So we came in much hotter. However, something more importantly to watch is the core CPI, because core CPI minuses out food and energy inflation. Because as we know, those two factors, if we get those two readings, they tend to be a little more volatile, given the fact that fuel and energy prices can be quite volatile. When we minus those out, when we look at core CPI, which minuses those out, we get a more better reading and a more better sense of what true inflation is, right? So what do we have here? So this is obviously the CPI for the year-over-year reading, and you can see that we came in a lot higher than the previous two readings. So we've actually ticked up much more. And the fear is, will this inflation continue? As we look into this a little further, you can see that we are quite relatively to a point where the Fed wants to maintain the level of inflation, right? So where can we see this data? Well, this is straight from the US Bureau Labor Statistics. And what I have here is the 12-month percentage consumer price index with selected categories and not seasonally adjusted. And as you can see here, right, the Fed for the longest time has been shouting out that he wants to tame down inflation to its normal 2% a year increase, right? So so when we look at what the Fed was trying to accomplish, he was really trying to accomplish this 2% inflation, and that kind of lies around this level right here, right? That we've seen throughout the past 2009 all the way to 2019. And all of a sudden, you know, inflation just skyrocketed, right? Due to the pandemic and all the stimulus that was injected into the economy. And so prices just kind of went out of control. So the Fed hiked their interest rates rampantly, which caused this massive decline in inflation, right? From all the way near, this was like 7%ish, and he really tampered down inflation by a rampant increase in interest rate hikes. And so we came close to this 2% mark, but we haven't gone under. So we're kind of sitting around that 4% to 3%. And, you know, if we really think about it, the Fed did a good job as far as taming down inflation. Now, the next goal that he is probably going to be doing is maintaining this high interest rate level, and the market is really taking this information quite well because as we know, the Fed is coming closer. As we get closer to 2% inflation, the Fed will be coming closer to a pause, and after that pause, he starts to see, after we start to see that inflation cools down a lot closer to 2%, that is when he's gonna more than likely start cutting the interest rate. So that way, businesses can take a little breather, and things can operate a little more normal, like how we've seen in the prior years. So that is what we are seeing as far as inflation goes. And as we know, right around the corner next week, we are going to see the Fed come out with their decision, and it's most likely going to be their last hike for the year, and it's going to be a pause for the next few decisions that will be coming around. So that is good. The market is taking this as a quite positive reading, and this is where we start to see a more sideways price action in the market. You know, we are tight right in the middle of the range of the S&P 500. If you look at the triple Qs, again, we are right in the middle as well, right? So we have positive reading on the MACD, but it's near the zero line. It's not rapidly going up, and obviously we can expect flat price action trading within a range. Um, Obviously, if the triple Qs moves up, we are going to be faced with this 380 resistance, and obviously the hard resistance line, which would be all the way up above at 387, with bottom level support with this current exponential moving average on the 15th, which lies right at 373, with the 50 being 368. So this is quite positive for the market. And what's helping this market sustain a sideways price action is really by just looking at the VIX. Right? So as we can see, the VIX is in total collapse because as we know, a VIX measures volatility, and when there's very little volatility, we can see stable prices where we do not see massive sell-offs or rampant price action to the upside on the S&P 500 or the triple Qs. So we can see really consistent prices, smaller ranges. So do not expect massive breakouts when you are trading the S&P 500 or the triple Qs. This is the time where you really just have to find levels where you can find the optimal trading point where risk and reward is really calculated and you do not take the massive breakout swings on price. So this is the market that we are in. Whenever we are in these types of markets, you really have to adjust the way you trade, right? You cannot assume breakouts or sell-offs, and it's more of like a buy the dip opportunity whenever we are in these types of environment, right? So that is what we have here today. Obviously, today is Thursday. We have one more trading day for the week to really complete this week's price action candle. And as we can see, the week is really shaping up quite positively, being that the prior week was a down week, and we are shaping up to be a positive week for this week's close. And we will be determining if we are indeed a positive week by tomorrow's close. And once we get that close, we could reevaluate the chart to see where we can possibly see the price actions will move towards, given the fact that we have the Fed interest rate decision for next week's trading session. So that is what I have for you today. It's honestly a flat week, flat trading week. And again, what's really important when it comes to CPI is the core inflation because that minuses out food and energy inflation reading. And as we can see, the markets are really taking this quite positively. So that is the environment that we're in right now. That is how we are going to be trading. And if you enjoyed this video, please go ahead and leave a like down below and subscribe to the channel, and we will see you on the next one.